The major averages are trying to rally following yesterday's roller coaster ride. Dow's up 138 today. Let's talk about how to position from here. David Zervos joins us, Jefferies chief market strategist, and Jeffrey Kleintop, Charles Schwab chief global investment strategist. Guys, good to see you both. Thanks for joining us.
Good to see you, Carl.
David, on Steve's point, and this Nick Timmerow's piece in the Journal today about stagflation, I'm going to bet you're not a buyer?
It's a good bet, Carl. We've got to know each other pretty well over the years. So, yes, definitely not a buyer of that story. Don't believe, as I think we've talked about many times, that the tariff story is really the big driver. The big driver for me is the dereg story, and even more importantly, the smaller government footprint story, or as Secretary Bessent likes to call it, the reprivatization story. I think that's a huge productivity win, a huge positive supply shock, ultimately disinflationary and great for growth. And I think that's really what the big picture focus should be on. The tariff story is just not nearly as important as we make it on a day-to-day basis. And the market likes to focus on it. I get it. It's a tangible thing, and dereg is less tangible on a day-to-day basis, but it is the big picture story for me.
Right. So then the prices paid survey data that we've been absorbing last couple of weeks is truly about front running?
I think a little bit of it. And, as Steve said in his opening remarks, these one-off moves are one-off moves. It's not a sign that we're de-anchoring inflation expectations or demand is really pushing prices to the point where the Fed should be worried that they've got an inflation problem that is untractable. These are supply dislocation problems for sure on tariffs, and much more likely to be one-off. So getting caught up in the transitory versus non-transitory debate is very different than it was, say, 3 years ago when inflation spiked on big movements in economic activity coming out of COVID. So I think it's a easier way for the Fed to say this is not nearly as important as from a permanent standpoint on inflation shifts. And again, we have a lot of disinflationary forces that I think are going to offset that in terms of lower cost of doing business because of less regulation. And a smaller government footprint, smaller government sector just brings labor and capital resources to the private sector. And that is a disinflationary story.
Agree. I think the Fed can look past it. But, David, I do feel like you have to explain if you're going to say that the tariffs aren't that big of a deal look at the retail sector, look at the auto sector. When you're talking about, 50 or more % of your goods coming from overseas that are now going to be taxed 25% higher or 20% higher in many cases, and you either have to eat that or pass it on to a consumer that's looking increasingly weary, why is that not a consequence to growth?
Well, Sarah, it's kind of the same story that we were discussing when interest rates were rising and all the private equity and real estate guys were jumping up and down, but it didn't really have the negative effect on the overall economy. A lot of people had locked in lower rates and other factors were benefiting, or financials benefited from it. So, yes, you have certain sectors that might be hurt, but I think the overall story, the U.S. is not really a big international economy. We're much more of a domestic economy compared to our trading partners, which is why we have these deficits that we have on the trade side. So, in the Y equals C plus I plus G plus X world, the X is just not nearly as important as it is in, say, many European countries or Asian countries. So you can tell a story that's ugly in a certain sector. It's just a question of the macro effect. And the macro effect to me is much less significant than people are making it out to be when you really dig into the internationalization side of the U.S. economy.
All right, Jeffrey, we haven't forgotten about you. So you've heard David. He's saying tariffs punches above its weight, if I could sort of paraphrase, for investors. Do you see it that way? And or what do you see in terms of the day-to-day impact here and going forward from this back and forth around tariffs?
Well, one of the things to keep in mind is the biggest exporters from Canada and from Mexico are not Canadian or Mexican businesses. They're U.S. businesses. It's Ford and GM. Perhaps why later this afternoon we may actually see those auto tariffs in Mexico and Canada get rolled back. Not a surprise to me to see that. That's where you would see maybe some of the pricing flow through in that category, simply because those auto manufacturers would need to pass that on. But I'm more excited about what I'm seeing outside of the U.S. German stocks are up over 20% in U.S. dollars this year. David just talked about how deregulation is a story here in the U.S. Smaller government, it's bigger government in Europe. Europe's stock market continues to widely outperform the U.S. After this German election, more fiscal stimulus is coming, more defense spending, more infrastructure spending, particularly after the Trump-Zelensky meeting. And I think, actually, there's a new Magnificent Seven. There are 7 stocks in Europe's defense index. They're up over 30% this year compared to the U.S.'s Mag 7, which are down 10. Seems like betting on European defense spending is a maybe safer bet than betting on continued infrastructure spending here in the U.S.
You think that's sustainable? I mean, we're going to be talking about Europe a lot more in terms of opportunity for investors for some time?
I believe so. Look, you've got a number of factors coming into play here. First of all, Europe's economic surprise index is up and rising. It's actually beating on data. In the U.S., it's not. Earnings revisions every week this year have been higher in Europe. We're seeing a real turnaround in momentum after 2 years of a rolling recession through Europe. That's reversing. And we're talking about potentially 800 billion euros of additional defense spending over the coming years. So this is going to be a major driver for years to come, not just here in the first quarter.
Yeah, we always joke about Larry Fink's comment in Davos that the mood was absolute despair, and now the best start for European names relative to the U.S. this century. David, Jeffrey, we'll talk soon. Thanks, guys.
Thanks.
Thank you.